So, what are the trades I'm currently taking outside of the? I've been trading some BDCs. I've been selling options and stuff like ARCC. I was profitable on this contract today. Decided to take I had a small gain on it, wasn't much, but I decided to buy some shares of ADX, which, if you look at its track record, has been phenomenal. So it's been dipping lately. So I've been picking up some shares. I rounded out today to a total of 100 shares. I'm just biding my time for a deeper pullback for it really load up on it. That fund's been done really terrific over its history, and it does pay close to about an 8% yield currently, distributes on a quarterly basis. That's one of the trades I did. In addition, I've been selling out of the money puts. They derive some income off of Mara, which is a popular Bitcoin miner. Now, I don't particularly want to own Mara, especially at $8 a share. I feel like if we go lower, we're probably going to hit that $4 to $5 level pretty soon if Bitcoin drops to 60 to 70. But the thing about Mara is it's so damn. I keep losing this chart. Mara is so liquid, especially when it comes to like options, and the implied volatility just because its price action is massive. Even if you go out of the money, let's say if you want to sell a put on Mara and you want to go out long expiration, I treat high beta names like Mara with a delicacy. I wait with a lot of delicate behavior rather. Um, I go out to the end of the year and I go out of the money and I average up the amount of premium I receive. So I enter one or two contracts at a time. So I've been going with the $5 strike on here, and I was paid. I did my first two. I got paid like $101. I got in prematurely a few days ago. Received $101 per contract, but now I'm selling them. My third one I sell for $112, and you can see the price is inching up. The last contract for the $5 strike went for 1.15. Multiply that by 100, that's $115. You see the amount of open interest on that? 67,539 in open interest. The volume today was 827. That's massive for an option contract with an expiration out toward next year, the beginning of 2027, basically. January of 2027. That's why I like trading the Bitcoin miners. They're very, very liquid when it comes to options. Now, what I've done with this multiple times in the past is sold the same strike whenever Bitcoin pulls back severely and wait for a bounce and be profitable, then close out the position. Now, I'm currently slightly underwater. My average is definitely below 115 per contract for three contracts, but I'll be gradually entering multiple contracts, as many as a dozen contracts on this position. Then on any bounce in the future on Bitcoin or Mara, because if Bitcoin moves like 1%, Mara can move like double digits percentage wise on a single day relative to what Bitcoin does. I mean, the beta on it's massive. So it moves relative to Bitcoin, it moves 3 to 4 times more at a minimum. So if that happens, you get a strong bounce in Mara on price action. These are contracts or if, like, for example, the VIX goes down, the implied volatility on the contracts drops, so does the option pricing. Because just about a couple of days ago, these same $5 strikes I'm looking at, they were only selling for like upper 80s to as much as 90. They had recently broke above 90, and that's when I put them on the watch list and decided, okay, getting close to my ideal entry, which is over $100, and they broke $100 just the other day. And I sold two contracts at that point, and I did a third later on today for $112. And I'll be watching Bitcoin's price action and entering more of these contracts, averaging up my amount of money I receive in premiums. Now, if I have to take assignment at some point, yeah, that's fine. I think that with my cost base being lowered down like three something per share for however many shares is going to be fine into the next halving for Bitcoin, because Mars is going to have a catalyst for going higher at some point based on just on the halving evolution over time. Now, I might be underwater slightly, but a $3 entry price, that's not so bad, to be perfectly honest, especially on something as liquid as this. Because even if you look on the coal side of this, you probably got pretty decent premiums that you could get on this. This is going out to end of the year, basically 15 January of 2027. You see what a $10 strike pays you. The last contract went for 260 bucks, basically. That's about a buck and a half, almost $2 out of the money. So they're liquid, man. Even if you were going to do just shorter time frames, even you could probably make pretty decent money. Let's say if we just went out to like 20th of March and sold one at the money, you can see that $9 strike. The last contract sold for 86. That's 86.86 times 100. That's $86 basically for that contract. So, and I look at the open interest and volume. So that's why I've traded these Bitcoin miners as proxies for Bitcoin for many years up until they got the exchange traded funds that started paying dividends like BTCI and blocks. And then they got the spot price ETFs like IBIT, which I'm watching now. But for a proxy, Mara and even CleanSpark, for example, maybe RIDE, if you want to go that route, are pretty lucrative. And the reason I chose Mara, really honestly, is not that I'm in love with the company or anything. It's just like the price action. It's lower in price. I get more in premiums on these out of the money contracts that I'm doing. All right, guys, be careful out there. Just one notion on how to trade Bitcoin's pullback is with out of the money cash secured puts, selling out of the money, kind of what you would call put leap options instead of call leap options. All right, guys, take care. Bye.